Another major AI funding round reportedly in the works. OpenAI co-founder Ilya Sutskever in talks to raise funds at a $30 billion valuation for his pre-revenue startup, Safe Superintelligence. Another example of a Silicon Valley company that is, for now, off limits to the general public. But those rules could get a second look under President Trump's new SEC. Kate Rooney has more in today's Tech Check. Hi, Kate.
Hey, Mike. Good morning. So there is this renewed focus on the SEC's so-called accredited investor laws. Those are designed to protect less experienced investors from private markets, which often come with higher risk, but increasingly high rewards. And so to get in on venture capital, private equity, hedge funds, for example, you need at least an annual income of $200,000 plus a net worth of at least $1 million. That includes about 20% of U.S. households at this point. And then there's also minimum investments involved in a lot of these funds. It also used to be that retail investors would get a shot at these growth companies when they went public, but that dynamic is changing. Venture-backed names are staying private significantly longer at this point. According to PitchBook, the median age now of a Series D or older company is about 9.7 years before that IPO. In the U.S. now has over 57,000 private startups. You compare that to about 4,300 publicly listed names, about half the total that we saw 3 decades ago. And then venture capital as an asset class, if you look at it, at least compared to the S&P, has outperformed with annualized returns around 14%. That's per PitchBook again. And Robinhood CEO Vlad Tenev, who we spoke to last week, he's among those pushing to lower the bar here. He pointed out some of the irony of everyday investors being able to get in on speculative meme coins and cryptocurrency, but not in some of the country's blue chip startups.
OpenAI, Anthropic, these companies that are making a lot of strides are still private. And so the returns and, some of the private investors that are in these companies have been sitting on returns of 1,000x plus are not available to retail. So we think the juxtaposition of that doesn't make sense. You can invest in meme coins freely, but OpenAI and SpaceX and companies like Anthropic are too risky. So I think we need to fix that.
Tenev is among those now pushing for a knowledge-based route versus wealth criteria. And then Amy Lynch, who I spoke to over at Frontline Compliance, pointed out that some of the laws were already loosened in the Trump administration, at least in the first Trump administration, and pointed to SEC chair nominee Paul Atkins. He was the commissioner during some of these heated debates, and then proponents of loosening these rules are hopeful that he's going to be supportive. Say it supports capital formation, makes these markets more liquid, and could make them less opaque. Critics, though, still going to worry about investor protection. Despite the success stories and the big wins, the majority of startups still fail, guys.